What's going on, guys? Welcome to another backtesting video. We're continuing from last video. You can see that we've done all this. We're looking at GBP USD, and I'm just going to get straight back into it. This was one of my most accurate weeks, which is why I've decided to backtest it. And we're going to just continue doing as we usually do in the backtesting videos, which is looking at price action, looking at price delivery, and understanding how time plays an effect in it. Another thing that we're also going to be looking at soon is just the delivery of the week in general. I want to go into more in depth and analyze it because of how accurate my depiction was on my expectations that week. I was very impressed with myself. Definitely showed a level of growth, so something to consider. So we have a low here, a high, a low, and then we can see we break higher. That makes this range from this low here, this swing low, to this high a breaker. You can see we come down, touch that, find support. Also, this red line is the Sunday opening from the week, meaning that as we come down into that, you can see prices reacted bullishly and traded away from it. As we fall into this level as the during the New York session, so you can see we trade down to it, and then at 8 a.m. we touch it, and then of course 8:30 we have the news release. We will not take out these stops. And then you can see we're pretty consolidated for most of the session. So this kind of consolidation, not the best environments. I wouldn't really want to trade in this, so I'm not going to analyze it too much because you can just see its consolidation, like back and forth action. But what I am going to do is I'm going to bring our attention to the lows that get taken. So that sell side gets grabbed there, that swing low. And then we've got buy side that gets taken there, swing high. And then we've got sell side getting taken again here, swing low. Or swing lows, relative equal lows. And then we got buy side getting taken once again here, swing highs. And then you can see we finally expand out of that, come down one more time, and then we continue high for the rest of the day. When we come down, we trade down into this fair value gap, which is beautiful during the London closing session. London closes from 10 a.m. until midday. So that means that finishes here. And you can see this would be the manipulation phase of that. We come down, grab stops. You see how we respect the 50% level of this fair value gap? That's supportive of higher prices. That's what we like to see. Oh, I keep doing this. I forgot you can do this now. Watch this, guys. I can't believe they've allowed for us to do this. Middle line. Incredible. Done. So anyway, we come down. You can see we expand higher. Do we have a break in market structure? Yes. This is a break in market structure. As soon as this candle closes above this swing high, we have a break of structure. We come down, back into this fair value gap. And this would then offer us an entry right there, which is delicious. So this kind of movement higher, so this is all manipulation. We come down, but this aggressive expansion higher with the remember we're expecting a draw higher because there was some kind of premium drawn liquidity up here. I can't remember what it was exactly. But we anticipated that to happen. So for us to see this come down here and find for us to aggressively start carrying on during the closing session, that's supportive. Also during London closes, which is 10 a.m. to 12, we expect some kind of run and stop. So that's why we see this pullback back into the range, back into this range from this low to this high. We come back down to the 50% level, and then we expand higher away from that. I'll just show you that now. So this low to this high, look at 50% level, come down, find support on it, and continue higher, which is lovely to see. So anyway, this fair value gap here would be a beautiful entry if we were to be trading. So we got a buy. Oh, we got a buy there. With our stop loss below, can be put below here, and then you can see we expand here. This will be a breakaway gap. We anticipate this being left open before we hit the target, which would be these relative equal highs. And there was probably, I think there was something on the, you know, on the higher time frame that is likely going to be drawing to as well, but we don't have that available to us right on this time frame. Wow, in this. So we draw up to that buy side liquidity, beautiful. And then I'd probably let off most of my position there, because that's where the relative equal highs are. That's where I expect price to be distributed. So let's just make that a sell. And then after 12, between 12 and 130, there is, like I said, there is some kind of pullback. You can see that happening here. ICT does talk about this. I don't know what to say about it, so to speak, but we have a nice run stop. So you can see these lows get taken here. We run right back down into this fair value gap, and then we continue to trail upwards for the rest of the day. Right, let's go into Wednesday now. Start from the Asian session as per usual. This is what I do every single backtested video. This is what I do every time I go into the charts to trade. Mark out the session highs and lows. And then we'll mark out 2 a.m. candle, which is here, here. Now I do remember the Wednesday being quite a consolidated day, as we can see. So I'm not really going to look into it, because look at this: buy side, sell side, buy side, sell side, buy side, sell side, buy side, sell side, consolidation, consolidation, sell side, buy side. Like, this was the Wednesday was the most disgusting day of that week. So in terms of yeah, it's not really ideal. I'm gonna just skip this, and then we'll go straight to the Friday and Thursday, because that's where we saw the aggressive selling happening, which I was anticipating, and that's where things got a little bit more interesting and exciting. So let's just go straight to the Thursday. You can see we're consolidating all throughout that Asian session, which is cool to see. One thing that's important to do as well is if you mark out the midpoint of the Asian session, you can see that price does use that as a level that it refers to, because you can look at how we find support on top of that. Can't make this up. Beautiful. And then we'll put the 2 a.m. here. $5 a.m. here. So you can see we trail up, take out the buy side of Asian session, classic price action really. You can see we find support on top of that 50% level. High, low, high, high, and then we break lower. So we have an entry on the breaker on this candle here. Breakaway gap. This is a breaker in itself. We can just make that this color and then just type in breaker. So as this candle trades back into this range, we could be selling here, because remember, we've taken out buy side. We're anticipating a run lower now. It fails to take out this swing high as well, which is interesting to see. So this is what you call a failure swing. And this is important because on the other, on Euro, was it Euro? On Euro, yeah, on Euro USD and on Dixie, they actually took out the high and Dixie took out the low. But you can see in pound we failed to take out that swing high, which hints to lower prices. We would then enter our position on this candle here, right there, like so. If you wanted to be more specific, you could look at this candle here and look at the 50% level. Look at how we respect it. That's if you wanted to be a little bit more, specific with it, And I say that because it's like this is the order block which causes this move up, which then gets traded through. I like to see when price trades through breakers like this. You see how aggressively we trade through it, all down candles. That is what I like to see, and you can see that happens here. trading on that, and then we continue lower. And this is where we start seeing lows getting taken out, and you see these order blocks getting traded back to, bearish order blocks getting traded back to, as we check our way down. This is classic price action as well. A pullback, we get to 50% of the range, we pull back to back into the range which we've already made. So yeah, you can see that we trade back up to the 50% level, back to the range. And we do that when we hit the 50% level of this range. This is something to notice. So we hit 50%, consolidate, pull back, and then we aggressively trade lower. Obviously, this would have been on news, as in this move lower would have been on, I think it was CPI, that's what it was. It was CPI. Now, this was the first time I traded CPI. And I anticipated all of this, which was perfect, so I'm grateful for that. But yeah, you can see we pull, all of this is what you call manipulation. I'll show you now. So 7 a.m. They manipulate, as in everyone thinks the market's going up, running into these, taking out stops. So all the people that are short from the London session, they're all getting taken out because they would have ran their stops here, they would have ran their stops here, even this swing high here. And then you can see CPI, we run up one more time right before CPI, and then bam, we aggressively start running down. Where are we running to? We're looking for south side liquidity. So all of these lows, relatively equal lows here, all that build up, all that buying, because remember Monday we started here, and Monday everyone's buying. This is what the retail would be thinking, and then they would have get absolutely killed by CPI. Now, this movement up before CPI is important to look at, because this is where the big money is selling. So every time we take out a high, big money is selling. So the big money is coming in and selling, putting in their positions to go short. So big money is going short here, big money is going short here, big money is going short here, big money is going short here. Big money would have been going short in other markets here, and then they trade all the way down lower, and then they obviously they eventually do take out this low. I think this was in this new week, so I don't want to get too much into it. Yeah, Friday we eventually run down and take out the sell stop. So, but they're not finished, is what I'm saying. They are not finished, and they're probably going to continue to dig deeper, because they've already put in their positions as we were moving up. They're already putting in their sell positions because they know the market's going to go lower. They want to push the market lower. So that's just something to consider, guys. But yeah, CPI last week was crazy. Right, let me just have a look at this. So yeah, beautiful delivery to the downside. Right into the little pullback. Remember, I said that as soon as the London close starts, we can expect some kind of run on stops. Do we have a run on stops here? Run up, just a little one. Sometimes it can come to like higher, probably take out 50% of the range. It can do that, but generally speaking, we like to see some kind of move lower, and then we have continuation. And because of how bearish we are, we eventually consolidate for the rest of the day, run up, and then we have Friday. So yeah, let's see how it delivered. So, consolidation, come down, look at these rebalancings that are happening. This is immediate rebalance here. Get rid of these. Now I've got to remember to take off the middle line, guys. Great addition, but now I've got to remember something else. Lol. Immediate rebalance there, but you can see we trade back into, remember this is a range. Come in, close it, respect 50% level. Let's get the 50% level. Respect 50% level there. Immediate rebalance here. High, low, high, close below it. As soon as we trade back into it, this could have been a sell here. If you really wanted to. High, low, high. So that means this order block here would be a breaker block. You can see we trade back in in that range. We could be selling in that. You know, got another rebalance here as well. Slight one anyway. Let me just continue, and then yeah, hits 1 o'clock, and then you can see the market starts to tipper-tapper around as it does. So finally, let's look at the Friday, just to bring our video, well, our week to a close, and then hopefully if we can get through Friday quick enough, I'll have enough time to just go over the week, because like I said, it was a crazy week in terms of delivery. And the Wednesday, how heavily consolidated the Wednesday was. It's because I was holding it for the Thursday and Friday. When you acknowledge things, look at that. Look at this. Look at this. Look at this Asian session. This is all manipulation. This pullback, excuse me guys, this pullback did catch me off guard because I didn't expect such a aggressive one. But then I looked at this, then I realized it's going to need to take out some kind of significant swing high, intermediate swing high, right, in the new day. And that's what we have here, this buy side. And then we do tap into that. But it's interesting to see how we trade right. You see, this is all, this range, we fill it right in. This is a liquidity void. You see, we fill it right in. Trade down to the 50% level, come up, grab those stops, and now obviously what are we looking for? South side, because this range now, as far as I'm concerned, from this low to this high, this range is now what do you call it? Has now been delivered efficiently. It's been delivered on the downside, upside, 50% of that range, and then we continue lower. I'll show you what I mean now. So we have a range from this low here. Oh, to this high here. Now if we look at the 50% level of this range, you can see how beautifully we trade to that 50% level here, and then we leave it. So as far as I'm concerned, on that Friday, I'm not expecting price to want to come back into the range. You can see obviously we have come back into it in the new week, and we can talk about that at the end of this video. But yeah, that's just something to consider. But let's just get into this new day real quick. Got about 15 minutes left. So we have a beautiful London session. You can see we trade lower. Where do we trade to? 50% off the Asian range. Also a breaker here, low, high, lower, low. So this is a breaker, and you can see we actually trade down into that breaker right there. We respect the we respect the 25% level of it, which is there. This will be the 25% level. You can see we respect that. I'm not going to mark it out, but you can see visually, like, that's what's being respected. And then what do we have? Another reversal, beautiful reversal here. This is beautiful price action, low, high, lower, low. So what's this candle? This candle is going to act as a breaker block. Then we have a break in market structure here. I do need to thin that up, although I do like it thick. Right, so we break a market structure, we come back down, leave a little gap, which is nice to see. That shows bullishness to me. But as it's trading back down into this, we could use that as a buying opportunity. We also run up into this, back through this fair value gap. We have a swing high here that we trade through as well. That's nice to see. And then yeah, we run up relative equal highs, high, high, high. All of these are relatively equal. That's buy side liquidity. And then this swing high. I would probably get out as we trade through this high, purely because I wouldn't be sure as to where we're drawing. I understand why it took out this buy side, right? So I'm going to say we could take off half our position here. It took out that buy side to protect it. It took out that buy side to protect it. And when I say protect it, I mean it took it out to like defend that level, as in we don't need to go back up there because the stops have been grabbed from up there now. And then I left all my position here. And you see we consolidate, break lower. We break much lower. And then this is another thing that's very typical of price action. From 7 a.m. we have a nice run up. Honestly, the more backtesting you do, the more you recognize these things happening at certain times. But anyway, this is just a false move. You see how we failed to take out this swing high? But we run up into this fair value gap here. And breaker. High, low, high, high. So we'll just mark out this range. But the way we trade back up into this is all manipulation with the intention to move back lower throughout the day. And what price will do is sometimes is it'll wait for the Asia, it'll wait for the London, sorry, blue is in New York. We'll wait for the New York session and it will wait for 8:30 specifically before we start to see a movement lower. You see how 8:30 we run up one more time, touch that fair value gap and then break lower, but all from 7 to 8:30 it's just manipulation. Price tends to do that. You'll see that a lot. If not, it will either like continue straight lower depending on how bearish we are, but there is usually some kind of false run on stops before the move lower at 8:30. So that's something to consider. So you could get in on a move is what I'm saying. You could buy this up to that if you understand where it's running to. But you can see we run into these highs, run into these highs, and it will trick people into thinking, oh, we're going up, we're going higher, we're going higher. But we're not. Remember, we have a bearish bias, and we've just taken out buy side liquidity up there. Price doesn't need to come back up here. You know, this is just manipulation, grabbing more stops, and what we're doing, we're selling. So big money is selling as we're moving higher. We're selling, and we're selling. Remember, above highs is where we're selling. So we're selling here, knowing full well that price is moving lower. So that's just something to consider. But if you did want to get in on this move, there is a breaker here. It's not the best. It's pretty high resistance. What is nice though is this break. I like this. How aggressively we trade below this low and close below it. Seeing the closing below it is what's nice. You close, a lot of back and forth action. This range is good. And then what happens? We break away precipitously, come up, fail to fill in this fair value gap, respect the 50% level and continue lower. Look at that. Into the London close. And remember, it is a Friday, so you can understand how as soon as that session's finished, it just kind of taper off, and then it takes us Sunday. But that's going to bring us to the end of that. I am going to zoom out though. I do want to look at this week as a whole because, like I said, delivery was gorgeous. So we had the Monday. As I called, I expected the low to get made on the Monday. We came down, filled in this fair value gap, started to trade higher. Manipulation, right up to the Wednesday where we had heavy consolidation and the high of the week made. There's a weekly profile that looks exactly like this when it makes the high on the Wednesday. So that's something to consider. But traded right up, created the high, and then we had big news which caused a big movement lower, and then we ran out and took out Monday's low right on the Friday. So this is a weekly profile. You can find it, but delivery was just beautiful. Yeah. Now, I do want to quickly, actually no, I'm not going to talk about this week because that will be in my video, but yeah. That's going to be everything, guys. Don't forget to like, comment and subscribe, and I'll catch you in the next one. Peace.